In this video, I want to take a look at Kyber Network, what Kyber is, what has been happening with Kyber, and what the future holds for this exciting crypto. And there has indeed been a lot of excitement around Kyber recently, with the Coinbase listing really driving a lot of renewed interest in Kyber. But there's a lot going on under the hood that makes this a very hot crypto to keep an eye on. In fact, it's so hot, I'm not even wearing any pants for this video. Now, before I begin this review, I do want to state that this is not a sponsored review and that I do not currently hold any Kyber, although I am considering taking a position at some point in the future. The cryptolark. This is where you subscribe for all of the latest and the hottest happening out there in crypto land. By the way, if you are new around here and you're still trying to figure out all of the basics of crypto, then you should check out my course, Cryptocurrency Explained, which takes you through all of the basics of how to get started in crypto. There's a link down below where you can learn more information about what's in the course. So what is Kyber anyway? Well, Kyber is an on-chain liquidity protocol that enables any token to be usable anywhere. A simple but very powerful idea. Kyber is enabling the decentralized exchanging of Ethereum-based cryptocurrencies in basically any application without the need for an intermediary. Look, I've been a big fan of Kyber for a long time, and if you haven't actually gone to check out Kyber Swap, which is their decentralized exchanging service, then you really need to. It is crazy easy to use, and it is a great representation of what is being done with decentralized finance. Now look, decentralized exchanges, they are super important, and it's really important that we not only know how they work, but that we actually go out and use and support them, because we know all of the dramas of centralized exchanges. You need to hand over all of your identity documents, which magically always seem to get stolen in some hack at some point. You also lose control of your private keys when you put your crypto onto a centralized exchange. Of course, there's lots of arbitrarily decided withdrawal fees that are sometimes way too high, and of course quite time consuming sometimes to withdraw your cryptocurrencies from those centralized services. Using a decentralized exchange like Kyber, though, solves all of those problems. Kyber's fully on-chain design allows for transparency and verifiability in the matching engine and gives you complete control of your crypto. And Kyber's fully on-chain token exchange and liquidity aggregation service has led it to quickly become the largest liquidity provider in the Ethereum space. Now, by integrating liquidity providers' reserves into one single endpoint for the taker, for example, you or a decentralized application, then it makes it super easy to access that liquidity. Now, this service has been proving so popular that now Kyber has more than 100 different integrations, making it a now cornerstone of the decentralized finance ecosystem. Also, the integration across a large variety of different liquidity providers has also made Kyber uniquely capable of handling more complex schemes and to be able to handle the different requirements of decentralized finance apps. Now, for developers, the Kyber platform also provides a rich array of different documentation and tools and APIs, all to allow you to be able to interact with Kyber's liquidity pools. Now, all of this means that developers can basically integrate Kyber Network into their dApps and thus be able to access instant liquidity via Kyber in a super quick and super easy way. The ability to move assets back and forth between people or just between assets for yourself in the click of a button, incredibly powerful stuff. Now, Kyber has facilitated over $139 million in trades and 576,000 fully on-chain trades just in February. Yes, that is less than centralized exchanges by miles. Yes, there are other competitors in the decentralized exchanging space, but that is massive growth, and it is on a major uptrend currently. Now, a big part of that Kyber uptrend can really be attributed to their massive list of partners. You can see in this chart here that Kyber has made itself a centerpiece of decentralized finance. I mean, just look at all of the partners on this list. It is crazy. You can now make decentralized swaps leveraging Kyber Network's liquidity with My Ether wallet and Opera browser, among many other different players. You can also make payments for different things in Decentraland, for example, and a few other different games, and even some cryptocurrency events like EdCon, all using Kyber, whereby you can send any asset, and the merchant or the game receives their desired assets. You can send, for example, synthetics, and they receive ethereum or DAI. And of course, Kyber finds itself at the heart of some of the biggest decentralized finance protocols like token sets, DeFi Zap, Nuo, Fulcrum, and that's all very, very exciting stuff. But the reason that I wanted to make this video on Kyber is to talk about the future of Kyber and some of the big and exciting things that are coming to Kyber in the coming months. Their Catalyst upgrade is going to bring in Kyber DAO, which is really going to big time shake up the already juicy token model. Kyber DAO will bring strong incentives for the different stakeholders to actually participate in the ecosystem in a richer way. In particular, the Kyber protocol upgrade is meant to really address three different groups of Kyber stakeholders. The first is the reserve managers. Now, these are the guys who actually provide liquidity to the Kyber network. The second is the dApps. So those are the guys who are actually connecting the takers, people like you and me, to Kyber's protocol to be able to access that liquidity. And the third category is the token holders, who are going to be put more at the center of the network than ever before. Kyber is going to introduce staking. Now, the new model will allow holders to receive part of the network fees in exchange for staking their coins and for participating in Kyber DAO. Now, at this time, we do not have an exact percentage on what the staking rewards are going to be, because it will be Kyber DAO, aka the token holders, people like you and me, who actually decide on how the fees for the network are going to get used by voting for the ratio between what tokens get burnt, what tokens get given back as staking rewards, and of course the reserve incentives for the liquidity providers. Now, in the future, the DAO might also be able to decide on listing for different tokens, reserve approvals, and even network development grants, which is all very, very exciting. Now, currently, the token burn rate for Kyber is set at 70% of the 0.25% exchange fee. Now, token burning is a great way for a crypto to gain value over time. The KNC token has a total possible supply of 211 million. 4.2 million have already been burnt. And Kyber is just starting to pick up steam in a very serious way. Like, really, it's a crazy token model. Kyber has already done $500 million in volume and collected around 6 million KNC in fees, and they've burnt more than 4 million KNC. Now, this will be basically a crypto that has a staking token that has a deflationary model, where the token burn and the rewards are determined by the actual network use. So the more users, the more incentive to hold the token. And that token model, it just went full crazy. I mean, just think about this. Kyber is going to be continually burnt, meaning that the tokens themselves become rarer and that the total rewards pool that is shared becomes more concentrated in the strong hands that are actually holding the tokens for the long term. Those rewards will, of course, increase over time as the volume increases and more tokens get burnt. It is a deflationary dividend token. I'm super bullish on this model. It's very, very interesting. Everybody will want to buy and to hold these tokens to get rewards, but at the same time, they will also be tempted to sell their tokens as the price soars due to it being locked up for staking. But they will know that if they sell, then they might be burnt for fees, meaning that it's going to be much harder to buy back in later. The game mechanics of it are super, super fascinating. And of course, the more KNC you stake, the bigger your share of the pie. So just how much can you make by staking Kyber? Well, even though we don't have any figures yet, I actually just wanted to do a little bit of speculation here to give you an idea of what could be possible. So currently we see that the exchange fee is 0.25%. Now in the month of February this year, there was $136 million in volume. Thus, $340,000 in fees were paid for the whole month of February. Now, what will need to be decided, of course, is what percentage of the collected fees actually ends up going to the stakers, because remember, we still need to burn some tokens, and yes, we're still going to need to take care of the reserve operators, so we can't leave those two stakeholders out. But let's just assume that the stakers decide that they deserve 50% of the fees. That is $170,000 for the month of February to be split up between all KNC token stakers. Stakers, not holders. You have to stake to get the rewards. Now, there are around 179 million tokens currently in circulation, so let us say that like Tezos, we actually see a very high percentage of staking happen, and that 80% of these tokens get staked. That will be around 143 million tokens that will receive a percentage of the reward. Now that would equate to around 1/10 of a cent per KNC that you hold. So if you were, for example, to buy 10,000 KNC tokens for around $7,000 today on the market, then you would be making around $11 a month in staking rewards based on the current metrics. Now, if exchange volume stayed flat for 12 months, then you would make $142 in staking rewards in a year. Not particularly awesome by any means, but that 2% annually is actually better than most banks are going to give you, so it's got that going for it. But it is worse than lending rates on most of the different crypto markets, and of course worse than staking things like Tezos. Now that of course assumes that volume stays flat, of course, and that the staking rate will be 50%. Now it could be much lower, it could be much higher. I mean, time's going to tell what actually plays out with that. But let's continue to assume that 50% is going to be the staking reward, and that volume increases by a magnitude of 10. So $1.3 billion a month on Kyber, or the same volume that Binance does in just one day. Then you're all of a sudden making $110 a month, or around $1,300 a year, or an annual dividend of around 18%. Now things start to get very, very interesting. Now, in all seriousness, the rewards ratio now is not super awesome, but if volume can continue to increase substantially, and of course as tokens continue to be burnt, thus reducing the total number of tokens that can actually be held by people and receive dividends, then Kyber could have a very exciting long-term profit potential for investors if you can get those kind of rates of return, or even higher if they get the volume up. I mean, we're talking long hold here, like a 10-year hold. That could really pay off, paying out dividends, making you money year after year after year. Anyway, that's all just totally random speculation. None of those numbers are official, all total speculation. But the thing with Kyber, to me, that really ensures that there is going to be long-term prosperity outside of just the sick token economics is that they have got an excellent product. Magical. That's crazy for crypto. It's a product that works, and it's a product that's good. It's ridiculously easy to use. It's useful. People like it, and people are using it. The numbers on chain prove it. And Kyber has managed to position themselves right in the center of the decentralized finance ecosystem. It is quickly becoming the liquidity layer of the DeFi space. It's a company with real vision and a strong purpose, and of course a great product. It is going to do very well in the coming years. This is one of those projects that just came out of the bear market, stronger than ever. And yes, there are many challenges ahead for Kyber, and nothing is certain, and there's a lot of competition. but Kyber has certainly made a very big impact in the decentralized finance space. And in spite of the exciting price moves recently, Kyber is still down massively from its all-time high of around $5.80 back in January 2018. So it's about 85% down since that time. It's crazy that back then the market cap of Kyber hit $770 million. So yeah, there's still a lot of room for the price to go up. But if we can actually see those kind of returns for people, then this is just likely the beginning of Kyber's fair price discovery process. But do, of course, be aware of the massive hype around Kyber right now. It can certainly lead to volatility in the price, and people could get burned in that short-term play. But long-term, the token model is very exciting, and the product is excellent. And if they can keep growing that liquidity, definitely one to keep an eye on. Anyway, those are just my 2 Satoshis on Kyber Network. You will let me know your opinion on Kyber down below in the comment section. What do you think? Can they keep growing their volume? Can they get over $1 billion a month in volume on Kyber Network? Can they do more? Do you think they'll ever get to $1 billion a day like Binance? If so, wowzers. Or is that just crazy speculation? You'll let me know down below in the comment section. Thank you so much for watching this video on Kyber Network. I really appreciate your support. And of course, if you could hit that thumbs up button or even subscribe to the channel if you are new around here, that would be supremely amazing. Hope you're having an awesome day out there in the world, wherever you are. Keeping safe, having a great time. Long live the blockchain, and peace out till next time.